What if I told you that one of the hottest hedge fund managers in the world is a 24-year-old former AI researcher with basically no Wall Street background? Within about a year, his fund reportedly exploded from a few $100 million to over $13 billion in positions. And his entire strategy is one gigantic bet on artificial intelligence. This is Leopold Aschenbrenner. But how did he get here? How did an OpenAI researcher become a hedge fund phenomenon? What crazy AI bets is he even making? And is he actually a visionary investor? I'll explain and you can be the judge. We have to start back a little bit before he got into all this stock stuff so you get a picture of where he's coming from. Before he was managing billions, Leopold, or most people just call him Leo, he was deep inside of the AI world. He worked in tight-knit, high-level circles, spent time around the FTX Future Fund ecosystem, and later joined OpenAI's Super Alignment team. And even though he did all that, his real turning point came in 2024 when he released a viral essay called Situational Awareness: The Decade Ahead. The core argument was simple. AI progress was accelerating way faster than the public understood, and the companies building the infrastructure behind it were going to become super valuable. Not just AI software companies, but the entire ecosystem, from chips, data centers, energy, compute power, cloud infrastructure, everything. Shortly after he launched that thesis, he put his money where his mouth is and he launched a hedge fund to bet on it. In late 2024, Situational Awareness LP was founded. And yeah, that's the actual name. Despite having almost no traditional finance background, he reportedly convinced some of the biggest names in Silicon Valley to back him. People like Patrick Collison, John Collison, and Nat Friedman. According to reports, the hedge fund started with about $220 million, which is crazy because most young fund managers spend years trying to raise even a few million. But Leo wasn't pitching himself as a stock picker. He was pitching himself as somebody who deeply understood where AI was heading before Wall Street did. And early on, the performance was insane. By the first half of 2025, reports claimed that the fund was up roughly 47%. Meanwhile, the S&P 500 was up only around 6%. This type of performance gets attention really quick, and he stayed hot all the way up until today. But what's in his portfolio? Because this is where you really understand the strategy. This fund is basically one massive AI infrastructure bet. The biggest positions included names like NVIDIA, Broadcom, AMD, Oracle, Taiwan Semiconductor, ASML, and even semiconductor ETFs. Basically every major company tied to AI chips and compute power. But then the portfolio gets even more interesting because he also piled into CoreWeave, Applied Digital, power companies, crypto miners, and energy infrastructure plays. And that may sound random until you think about what AI actually requires. If AI keeps scaling globally, the world is going to need absurd amounts of GPUs, electricity, cooling, data centers, and power generation. So Leo wasn't just buying AI stocks, he was buying the physical backbone of a future AI economy. And as if this wasn't bold enough, he was even leveraged. Early filings showed massive Intel call positions and aggressive options exposure. By early 2026, filings suggested that the fund had over $13 billion in reported positions. That growth rate is ridiculous, but it also creates massive risk because this portfolio is incredibly concentrated. If AI momentum slows down, this thing could unwind super fast and cause a big headache. And this is where the opinions are completely split. Some people think Leo is one of the smartest macro investors of this generation, and their argument is simple. He understood the AI boom earlier than almost anyone else and positioned aggressively before Wall Street fully caught on. But critics just say that this is basically leveraged AI mania. They compare it to ARK Invest during the innovation bubble or even the dot-com era investing. And honestly, you can kinda support either side depending on what your bias is. If AI really becomes the defining technology of this century, these positions could still have enormous upside. But if AI spending slows, valuations compress, or sentiment even shifts a little bit, a concentrated portfolio like this can get destroyed. Leo's strategy is not about diversification, it's about being very right on one single thing: artificial intelligence. So is Leo one of the best traders in the world? It's honestly probably too early to say. He's definitely become one of the most fascinating investors in finance right now because this isn't really just a traditional hedge fund story. This is what happens when a tech bro collides with financial markets, and over the next few years, we're probably going to find out whether this was visionary investing or peak AI bubble behavior.